Multichoice Group says profit for the 6 months ended in September came in lower by 5%. The pay TV giant says a tough economy, weaker currency and losses from its streaming entity Showmax hurt its performance. Multichoice says active subscriber numbers fell by 2% after the Football World Cup to 21.7 million, with a 5% drop in South Africa due to power cuts and the removal of non-revenue generating customers. Despite this investment in its flagship streaming service, Showmax saw subscribers go up by 13% over the reporting period. To give us the better understanding of the numbers, we're joined now by Multichoice Group CEO Calvo Mawela. Calvo, just looking at this particular picture over the 6 months to September, how were the operating conditions and could households really keep on paying for those subscriptions?
Yeah, thanks, Mutewa. Good evening and good evening to our viewers. We have delivered resilient operating performance considering the headwinds that we are facing this first half. If you look at South Africa, the macroeconomic conditions are really tough. We have had load shedding in the first quarter, which was at its worst, and therefore people cannot watch television when there is no power. That is the first case in point. If you look at the rest of Africa, we have faced headwinds as a result of the Naira devaluing almost 100%. But if you look at the operating performance of the group, which are things that are within our control as management, I believe we have been exceptionally good in terms of execution. If you look at organically, you will see that our revenue should have been up 4%, trading profit should have been up 18%. However, all of these metrics are down as a result of what? Of the headwinds that we have faced in terms of the devaluation of the Naira, as well as our investment in Showmax. And we are doing the right thing, investing in the future of this business going forward. So I'm really proud of what the team has delivered under very tough economic conditions.
That overall group revenue rising 4% on an underlying basis to 28.3 billion, but it was down 1% reported basis due to that weaker local currency you're talking about, the Naira. Did the Rand have any effect in terms of currency weakness to the incomes?
Yeah, the Rand also fell somewhat, but not as significant as the Naira has done. But I think we need to put the Nigerian economy into context. We believe very strongly that the direction that the government of Nigeria has taken is the right direction in terms of making sure that the currency float and the market determine at what price the currency needs to be. And that is what we've always been calling for. That's what investors in Nigeria have always been calling for. And we believe it's short-term pay for long-term gain. That's what we believe very strongly, that the Nigerian market is a market that you can't ignore. Over 200 million people, predominantly youth market, and population growth is happening. And as long as the fundamentals of the macros are done appropriately, we should be able to get our return in the long term.
And of course, a lot of eyes in Nigeria in front of those TVs, so a great investment. The group operates in about 50 countries in sub-Saharan Africa. Now, you've had headline earnings of 1.9 billion. These are also down from the 2 billion that we saw last year. Did you have any positive margins looking at the 6 months to September?
Yeah, I mean, if you look at the free cash flow, for instance, that is down, it's just a result of a decision that we took as management that we would like to invest into Showmax. And what we are doing with Showmax is to bring Showmax 2.0, which is totally different to what we are seeing today. We are bringing EPL in your pocket. And we believe very strongly that in 5 years' time, we should be able to generate $1 billion in revenue in Showmax and double our subscriber base. Why we believe that? We believe that by bringing 380 EPL games in your pocket, which means on a mobile phone, we are targeting individuals instead of households as we've done in the past. And we believe the youth are going to take up this service, and we should be able to bring it to the youth at the right price point. And the partnership that we are going to do with mobile operators should be a compelling proposition for youth to take up this product. Football is like gospel on the African continent, and it should be able to take up very well and be able to deliver the returns that we have. And this is one product that we've always had, and we are monetizing it in a different platform. So we are very confident that Showmax 2.0 is going to deliver great returns for us.
Now, the group saw premium customers go up by 5%. The Rugby World Cup, how much did that have an effect on that particular number? A lot of people wanting to see South Africa go all the way to the final.
Yeah, I think it has contributed to that. And what we have seen, however, is that we have also launched a new product called DStv Stream, which means that you can be sitting at your home, you just download the app, and if you pay the subscription, you are able to log in and be able to up and running. That is a new proposition, and we are seeing 90% of the people that take up DStv Stream are totally new subscribers to DStv. And that shows that with our innovation, we are able to bring new customers onto our base.
50 markets to look after in terms of multi-choice. How much are you spending in terms of making sure you're walking the regulatory line in every market that you're in?
Yeah, I mean, we have been on the continent for over 30 years. We understand the regulatory landscape very well. We comply with the laws. We make sure that when we get into a country, we hire locals. Nigeria is run by Nigerians. Ghana is run by Ghanaians. Zambia is run by Zambians. We have also built a production line of local content. We have actually built the film industry in almost all the countries that we operate in. It was never as large as it is now, and it's because of our investment into those areas that we are able to do so. I think governments are appreciative of what we have brought to the table. More and more people on the African continent no longer aspire to watch Hollywood movies. They want to watch their own people that speak to their culture, their day-to-day lives. And that's why, if you look at viewership, local content is viewed far much more than international content. And it works towards our strategy. It's also commercially viable because you pay in local currency, you are not exposed to dollar-denominated costs. And that has been our investment into these industries. And we're seeing good growth coming through as a result of that.
I think the local content has really proven, especially through Shaka Ilembe, we saw record numbers in terms of viewership there. But it's still a very rigorous competition in terms of that space that you're operating in, especially with streaming content where players like Netflix and Amazon come into different markets and they dominate. Do you think that R500 million that you're spending on the Showmax relaunch will help you wrestle at least for more of the cake when it comes to viewership there?
Yeah, I mean, the relaunch of Showmax is two areas really that we're investing in. We are investing in the platform, we are ramping up local content. But if you look at our group as a whole, we spend over 10 billion rands just on local content alone. None of the other players are able to spend that amount of money, and it's harder for them to be able to have presence in all these countries that we are in and be able to build the kind of production lines of content that we have been able to build over many years. We believe very strongly that we have our key differentiator is local content and sport, and we can do it better than everybody else. And in Africa, as I've already told you, people love watching themselves on television, and that's why we believe very strongly we are well positioned. We still have a lineup of international content. The partnership that we have done with NBC Universal and Sky allows us to get their content for the next while. As a result of this partnership, we still have HBO as part of our international content. We have got Sony, we have got Warner Brothers as well as part of our international content offering. So if you look at the proposition that we have, there is no one that can match us in terms of the overall content mix that we have, the best of sports, the best of international, and the best of local.
Let's talk about that war chest in terms of capital at Multichoice Group. I mean, you are negotiating in different sporting licenses to get some of that content here to South Africa. Are you feeling quite confident about the health of that war chest that you do have at Multichoice?
Yeah, we feel confident that we, over and above just the war chest in terms of ability to pay for this product, the other thing is we bring in a whole element of making sure that it's just not whistle start, whistle stop, whistle start, whistle stop. We bring in analysis of the game, so what we call the game before the game and the game after the game, which also attracts a lot of people to stay within our platform. And sports rights owners also appreciate that we are just not just showing the game. We make sure that people are engaged with other elements of the product that we are showing to them. So there is a lot of work that goes behind the scene to make sure that it's just not about the game. It's also about things within the games and outside the game so that the product can get resonance with our customers.
And the technology, of course, in this space is just as important. How much are you spending on infrastructure to make sure you keep up with the trends, like you said, streaming on our phones and streaming on our tablets to find some of these favorite games that we like to watch? Is the spend there increasing as well, just to keep up with the international trends?
Yeah, to answer that question is that, as we have announced, we have partnered with Comcast Sky. And the reason why we partnered with them was that their Peacock platform is able to do 6 million concurrent streams in December when the NFL plays. That presents us with an opportunity for us to make sure that we have the best platform that is able to do live sports with a whole number of people that are coming in at the same time without the platform falling over. That investment, we have made it clear that it's about 3-4 billion rands, and that is the investment that we are making now. But we know that we will have a platform that is second to none in the world, and will keep up with the roadmap of one of the best platforms in the world. And that helps us to make sure that we are able to deliver against our promise of making sure that this platform will not fall over. It will be second to none in the world.
Well, thank you for joining us. That was Multichoice Group CEO Calvo Mawela.